So let's start off with the first M, which is mechanics. So for those of you who don't know me, a little bit of background about myself. I spent about 7 years in the Air Force, flew all over the world, loved it. It was a blast. And since then, I've really jumped headfirst in the whole world of finance and investing. Now, as I said, I've been trading and investing since the age of 18, but not successfully for the first few years. But since leaving the Air Force 5 or 6 years ago, I've managed to accurately forecast major economic movements such as QE 2, 3 and 4. We've got several Bitcoin crashes to within weeks. And the one I'm most proud of is the 2012 Apple share price crash. We'll talk about that later, but long story short, Apple was about to launch its iPhone 5. It was $705 or $706 a share. And I was screaming off the rooftops for people to get out of Apple or to short it, i.e. sell it, because I said it was about to crash. And I was vindicated within months as Apple went from $706 a share all the way down to $390. Some of my clients saved or made 5 to 6 figures. It was really quite fulfilling, that, and all sorts of different things. Now, on top of that, I've been doing all sorts of things like holding 2-day intensive workshops, which I no longer do now. I'm a regular keynote speaker at the annual Mayfair Wealth Summit and all sorts of other wealth type events. But one of the things which I really enjoy now is speaking at schools. I love speaking at schools for free and trying to empower the kids at school today that they can do or be anything that they want, really, because people have all sorts of obstacles which we develop either mentally or in the social world, really, and it's all these self-limiting beliefs that really hinder people's full potential. So I want to get there into people young, and so try and slowly alter their mindset so they know that they can do or be anything. And how to put the realistic steps in place for them to actually achieve their big pie in the sky goals and dreams. But we're going to touch on goal setting later. Now, along this journey, I've had massive financial highs and really, really bad financial lows. So starting with the highs, when I was 23, I bought my first Aston Martin, and I, just for shits and giggles, got my private helicopter's license. So during the week I was flying in the Air Force, and in the weekends I was jumping into the chopper, landing at my friends' gardens, picking them up, and then flying off to some random hotel for some afternoon tea. It was like a $6,000 cream tea, but all in all. But it was great. So they were the financial highs. I was absolutely loving it. But the financial lows were really proper crap, to be honest. I remember a time where after I left the Air Force, I was really narrow-minded. I was really focused because I wanted to trade full-time and do it properly, but I really wanted to carry on flying. So I was like, right, I may as well get my commercial helicopters license, etc. And once I did it all, I did all the exams and got the piece of paper saying I've done it, I realised that I was like, bloody hell, I don't actually want to be a commercial helicopter pilot. And so that was about 60, 70 grand just wasted. So about when I was 25, Ellie and I hit rock bottom. And for a 6-month period, we really, really struggled. And I remember one time we were in the cheapest supermarket we could find, and Ellie came up to me with cheese in one hand and mayonnaise in the other and sort of just shrugged, and I knew exactly what she meant. Basically, we were struggling to decide whether to buy cheese or mayonnaise because we couldn't afford both, and it was awful. So it was like a massive knife in the gut there, and I can't tell this with Ellie in the room because I just welling up now. So, later that day we went home, and I made a massive plan. I planned the next 30, 40 years of our lives, and I said, right, within 5 years we will never have to work ever again, ever. And I said by the time I'm 30 years old, we're going to be semi-retired, and as in we'll never need to or have to work again. And yeah, so 4 years later, we're well ahead of in fact, we are now semi-retired. We are financially independent. And I'll show you what the actual definition of financial independence is later. But very early on, after making that plan, I knew exactly, I knew that we're on track to getting there. And the main reason for that, and I'll touch on goal setting properly later, is that I had all my pie in the sky goals and dreams and aspirations, but that's where people stop. One, they just keep it in their heads, they don't write it down. So the first thing, we wrote it all down, and the key thing is putting those mini realistic steps in place in order to achieve that. And you really do need to go into the weeds, right down to the monthly, weekly and daily targets. And the reason I knew I was going to get to my big goal is because I was smashing my daily, weekly and monthly targets. And if you're smashing them, you know that you're getting closer to the big goal. But if you're failing and hitting short of your mini targets, you know that big goal is just ever getting further away. So yeah, that's how we knew it. Now, the point I'm trying to make here is that no matter what hole you may find yourself in, whether it's a financial hole, a relationship hole, a business hole, a fitness and health hole, whatever hole it is, you need to grow out of that hole. Don't shrink into it. So many people they prefer to be comfortable than do the necessary actions it takes in order to get themselves out of the hole that they're in. So if you're in a financial hole, you shouldn't shrink into it and worry about shaving costs and credit cards, etc. You need to grow out of it. And in order to grow out of a financial hole, you need to grow multiple income streams or increase your income. So I have the utmost respect for Martin Lewis, the money saving expert. He's done phenomenally well, and he does have some really good advice. However, he is helping people focus on exactly the wrong thing. He's helping people focus in getting comfortable and shrinking into their hole, like reducing costs on whatnot and shaving costs on credit cards, etc. He's helping the nation focus on exactly the wrong thing, when in fact you need to grow out of your hole. You need to focus on increasing your means, increasing your knowledge, so you can then increase your income streams and have multiple income streams. That's the crucial thing. If you have one income stream, that's not financial security, because if you lose that and things can go wrong, if it can go wrong, it normally will go wrong, you're screwed. So you need multiple income streams. So that's the point I'm trying to make. You need to grow out of your hole. So when I first started investing and trading, I was about 18. I knew absolutely nothing. I mean, you may be sat there thinking, I haven't got a clue about how the world works. Well, I knew a lot less. I mean, if you read my book, in fact, if you haven't read the 15 grand Pop-Tart, get it, go to my website, www.therealistictrader.com. You'll get this book for free. This is pretty much every mistake you could ever make. And I'm a slow learner, so I've made every mistake at least twice. But as I said in here, when I first started getting into this, I mean, when people were talking about the FTSE, I was like, are you talking about football or money? I didn't have a clue. But I came across this guy, Warren Buffett. Now, it turns out he was a pretty big deal. He was the richest person on the planet at one point, the Oracle of Omaha. Now, he coined a phrase, or the terms, life skills and skills for hire. And this is something which really resonated with me. So for instance, cleaning your teeth every day. Is that a life skill or skill for hire? It's a life skill, surely. You do it yourself. You don't pay someone to clean your teeth unless you're Warren Buffett. But removing a tooth, that's definitely a skill for hire. That's something you outsource. You don't do that stuff on your own. Just like raising your children, that is a life skill, or so it should be. But delivering a baby, popping one out, that's definitely a skill for hire. So we put investing, personal finances, trading, all sorts of money related stuff in the skill for hire category, when it damn right should be a life skill. We spend our blood, sweat, tears, talent and time working our guts out to get our small portion of income, and we're all too willing just to hand over our life savings to some fancy pants stockbroker or IFA with 1 million letters after their name just to look after your money for you. No one cares more about your own money than you do. The tax man comes pretty damn close, but you care more about your own money than anyone else. So you need to take things into your own hands and take responsibility for your financial future. People spend more time Googling and researching their next car on Auto Trader than their next investment or where they're going to put their savings. It should be the other way around. I mean, we spend a lot of time learning how to drive a car because it is an essential life skill. And we should spend at least the same amount of time learning how to invest. Now, you're already one step ahead of the curve because you're already doing something different. So I commend you and applaud you for that. So going back to Warren Buffett, by the way, you need to remember that he is the pin-up poster boy for every financial professional and investment guru. And in a really candid interview, he was basically slagging off the whole investment world. And he says here, "It's the only industry I can think of where the professional's efforts subtract value from what the layman can do himself." That's huge. Just think about that for a moment. He's basically saying that any average Joe without any financial intelligence whatsoever could do just as well as a fancy pants stockbroker earning millions of pounds per year, as long as you're armed with the right information, education and training. I'm going to sound like a parrot because I'm going to say that so many times over the next few hours. You need the right information, education and training, and that's so crucial. And this really resonated with me because he's basically saying that we can take things into our own hands and do just as well. In fact, what you'll be surprised is that of all the hedge funds and funds out, actively managed funds out there where you put money into a fund and you have a fund manager managing all, 96% of fund managers fail to beat the stock market. 96%. That's absolutely ridiculous. So you could just invest in the stock market in general and beat 96% of the world's cleverest minds. So again, this is another reason why you need to learn this stuff. So moving on, I'm just going to show you that the investment world, they gauge their performances mainly on two things, so the stock market and inflation really. So let's start with inflation. Now I won't go into this in depth because I could talk about this all day really, but here's a Snickers bar, my favorite chocolate bar. I eat truckloads of them. Now, over the last 10, 15 years, I've been subconsciously, mentally tracking the price of Snickers because I eat so much of them. Now, if we just go 10 years ago, they were on average 30p a chocolate bar, a Snickers bar. And now 10 years later, 2015, they are at least 60p a bar. I am forever spending 80, 90 pence per Snickers bar in petrol stations. I mean, that's just 10 years and it's gone up by 100% at the very minimum. I mean, I've seen some places, realistically, it's probably more like 150% over the last 10 years. And to make things worse, all Snickers bars and Mars bars, they're all 7.2% smaller than they used to be. That shocking stat applies to more things than you can imagine. Fairy liquid bottles, crisp packets. I mean, you open a packet of crisps these days and they're half empty. So that shocking stat applies to everything in your life. Everything is either of less value or of less volume than it used to be. So that's one thing you need to know. And even though the newspapers are saying all sorts of things like inflation is falling, etc., you need to understand that there's two types of inflation. You have monetary inflation. That's when the governments and the bank, they are increasing the monetary supply. And then you have price inflation. So that's the prices of stuff. So yeah, real inflation, everyday living costs are at least 10%. They're double digits. They're 9, 10%. So if your money, your savings or investments are making you less than 10% per year, you are losing money every single day, or you're losing purchasing power. Now, so that's the Snickers. So here we have a performance chart. You'll never see another one in this course after this slide, but this is basically showing, so this 0% line is basically, well, 0% in performance. And it goes from the year 2000 all the way to year 2012, early 2012. Now, if you were to plot 2015, it would be exactly the same picture. Now, This red line here is the S&P 500. So this is the US stock market. So it's the 500 largest, most traded companies in the US stock market. So long story short, when the S&P 500 goes up, the US stock market goes up, and when it goes down, everything is bad. So from the year 2000, it has done absolutely bugger all. It's gone sideways. It's gone diagonally down. It's just pretty much gone sideways. And in that time, we've had two of the largest stock market crashes ever. We had the 2000-2001 tech bubble crash, and we had the 2007-2008 subprime mortgage collapse, where pretty much everything went down. In fact, in this crash, 16 years worth of your pension got erased. Well, American pensions and savings. 16 years. Now, if you were to compare this against anything tangible, anything physical, take gold for instance, even with the latest downturn in prices since 2011, it's still gone up well over 400% during that time, and again, same with silver. And don't get me started on the UK state pension. It is a Ponzi scheme. There's nothing left in it. The reason why the government are pushing this new workplace pension scheme is because there's no money in the coffers to pay those retiring now. So they're trying to force all the businesses to start paying into this workplace pension scheme to fill up the coffers again. But by the time that I'm of a pensioning age or you're of pensioning age, there won't be any money left. Just keep watching that pension age increase. In fact, not many people know where pensions came from, and it came from around 1909. It's either the Labour Party or the Liberal Democrats, and basically it was a way for politicians to win votes. So they said, right, vote for us because we're now going to start this new awesome sexy thing called a pension, and we will give a pension to all those people who are over the age of 70 years old and above. Now that's very well and good, because back in those days, mortality rates were really, really low. People are dying in their 40s and 50s. So that was the equivalent of giving someone a pension who is of the age of 124 years old and above. So obviously it wasn't going to hurt finances because there are hardly that many people there. But because we've had technology and improving, all sorts of things improving, people are living longer and older, and human population is in exponential growth right now. So the pensions are the biggest debt bomb that has ever really been created. So the government is basically screwed. I'm putting it, people think I'm a doom, or some people say, oh, I'm just a doom and gloomer. I'm not. I'm being frank with you here. I'm a realist. I'm the only person out there really telling things how it is. So even if you may feel that things are really pessimistic at the moment, just be aware that if you know how to trade, it's great, because where there's doom and gloom, when there's blood in the streets, you can profit from it. And so instead of burying your head in the sand, you can actually do something about it to protect your family. Now, if we just go over to the whiteboard here, I'm going to show you there's something called a silent crash, which has been largely been overlooked. So this is a silent crash. So a silent crash is something which is largely overlooked, and I still haven't met a single IFA which is aware of this. So I always hear that, oh, Siam, the stock market has only gone up since the year dot, and yes, it has. If you were to plot the stock market from say 1900, it would look like this, and then this, etc. This is a really rough stock market. So this would be from say 1900, etc. Now, what a silent crash is when the market goes sideways for 5 to 15 years. So it's done it several times over the last 100 years. So it just goes sideways 5 to 15 years. Now, the reason it's called a silent crash is because most people's life savings, pensions and investments, etc. are what we call index linked. So that means it tends to do whatever the stock market does. So let's look at this one here. When the stock market goes sideways for 5 to 15 years, that means your life savings and pensions also go sideways. So you're making nothing. But what do you think happens to real living costs? Yeah, you've probably guessed it. Everyday living costs never stop. They never go sideways, hardly ever. And so you're losing money. That's why we call it a silent crash. And over the last 15 years, we've had a silent crash because it's done nothing over the last 15 years. And we've had two of the largest stock market crashes ever. So that's a silent crash. So that's the silent crash. And so as you can see, when the market goes sideways and does bugger all, you are losing your life savings are just dwindling whilst everyday living costs are going up. And you can probably feel that your living costs are going up all the time. So that's that. Now, a lot of people at this point say, well, you make this sound really easy, Siam, but surely isn't investing really tricky though? And well, yes, if you have no knowledge or the right information, education, and training, yes, this could seem quite daunting, but really the answer is no. And the main reason being is that you really need to become a wealth cycle investor. Now, I'm going to explain that in a sec. So even though I am a currency trader, which is inherently short to medium term, I'm actually a long-term fundamental value investor, i.e. a wealth cycle investor. Now, speak to any billionaire, whether they know it or not, they are wealth cycle investors. So here's what I mean.
Now I've had to pause it here as this is the end of the free video series and also the first couple of course videos. So to continue on your trading and investing journey and to learn more about wealth cycle investing and the wealth of other knowledge on the course, just click the button below to enroll on the course and you'll be profiting from the markets on your own in no time at all. Again, I'm so confident of the effectiveness of this course and the knowledge I share that there is a full 100% 60-day money-back guarantee. There is literally no risk for you to jump on board and start developing your new skill set and life skill. I'm taking all of the risk here, and out of the hundreds of students that we've successfully taught, we've had just one refund request. Plus, you even get 2 months of gold membership for free, and that also includes my actual trade setups in real time. So just click the button below, and I look forward to guiding you and your family into financial independence.